Based on the historical data and forecast, Bitcoin has shown significant volatility. The recent RSI values have been consistently below 30, indicating an oversold condition. Considering the forecast for the next week, which predicts a downward trend with prices potentially reaching $58,400, a conservative strategy is recommended. We will implement a contrarian strategy, anticipating a potential bounce after the oversold condition. The entry price will be $58,400, coinciding with the forecast low. The stop loss will be set at $57,600, just below the recent bottom of the Bollinger Bands, to protect against further downside risk. The target price will be $62,000, aiming for a rebound towards the support level and a reasonable profit. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential buying opportunity. Given the forecast, we will enter a long position at $58,400. The stop loss will be positioned below the lower Bollinger Band at $57,600. The target price will be $62,000, aligning with the support price and a conservative profit margin. This approach balances the RSI signal with the Bollinger Band's volatility indicator, offering a well-rounded and risk-managed investment strategy. Based on the historical data and forecast, Ethereum shows a generally upward trend, although with some volatility. The RSI consistently stayed below 38, indicating an oversold condition for most of the period. Considering the support at $1,620 and the forecast prices, I recommend a long position strategy. We will enter a long position when the RSI reaches below 20. Specifically, on June 19, 2026 Friday, with a forecast price of $1,640 and an RSI of 13.3, we will enter a long position at $1,640. The stop loss will be set at $1,610, just below the support level, to limit potential losses. The initial target price will be $1,680, aligning with the recent resistance and forecast. To refine the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, it could indicate a buying opportunity. If the price reaches the upper band, it signals a potential sell. For this strategy, we will adjust the target price based on the Bollinger Bands. If the price reaches $1,680, and the forecast price for June 20, 2026 Saturday, is $1,660, we will move the stop loss to the center of the Bollinger Bands, which is $1,870, and set a new target price at $1,720. This approach balances risk and reward, capitalizing on the upward trend while incorporating technical indicators for more informed decisions. Based on the historical data and forecast, BNB shows a downtrend, particularly evident in the recent forecast prices which predict a continuous decline. The RSI consistently hovers below 50, indicating a bearish momentum, with recent values dipping into oversold territory. Considering the support price of $552 and the forecast price dropping to $533, I propose a contrarian strategy focusing on short-term bounces. We will initiate a short position at $577, placing a stop loss at $587, just above the recent resistance level. Our target price will be $554, aligning with the forecast and offering a substantial profit margin. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the bottom of the band at $534, it suggests a potential reversal. However, given the bearish trend, we'll prioritize the RSI and forecast data. This portfolio will be 70% short BNB and 30% in cash, allowing us to capitalize on potential upward corrections while mitigating risk. This approach balances the need for high returns with prudent risk management, crucial for navigating volatile markets. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and upward movement. The RSI consistently dips below 30, indicating oversold conditions, while the Bollinger Bands show volatility. Considering the support at $1.1 and the recent upward trend, a long position strategy is recommended. Specifically, enter a long position at $1.13. Set a stop-loss order at $1.08 to mitigate potential losses if the price declines. A reasonable target price would be $1.2, aiming to capitalize on the upward momentum. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI falls below 20, it signals an oversold condition, suggesting a potential buying opportunity. Conversely, when the RSI reaches 80, it indicates an overbought condition, suggesting a potential selling opportunity. The Bollinger Bands provide insights into volatility. If the price touches the lower band, it could be a buying signal, while touching the upper band could be a selling signal. Combining these signals, enter a long position at $1.14. Place a stop-loss order at $1.08 and set a target price at $1.22. This blended approach seeks to leverage both momentum and volatility indicators for optimized returns. Based on the historical data and forecast, Solana shows a generally upward trend with periods of consolidation. The RSI consistently dips below 30, indicating oversold conditions, and the Bollinger Bands suggest potential volatility. Considering these factors, I propose a combined strategy focusing on capitalizing on these oversold bounces while managing risk. We will implement a buy strategy when the RSI falls below 20, anticipating a rebound. The entry price will be $64.3, with a stop-loss set at $63.3, just below the support level, to protect against further downside. The initial target price will be $71.2, aligning with the recent resistance level and the center of the Bollinger Bands. To refine the strategy, we'll incorporate the Bollinger Bands for dynamic adjustments. If the price approaches the upper band, we'll consider taking partial profits or tightening the stop-loss. During the forecast period, with the anticipated price fluctuating between $65.7 and $67.8, we'll maintain a cautious approach. If the price reaches $67.8, we'll move the stop-loss to break even to secure profits. The final target price will be $82, the resistance level, offering a significant potential return. This combined approach balances the RSI's oversold signals with the Bollinger Band's volatility indicators for a robust and adaptive investment strategy. Based on the historical data and forecast, TRON demonstrates a sideways trend with consistent support at $0.317. The RSI consistently remains below 40, indicating an oversold condition and potential for a bounce. The Bollinger Bands show that the price is currently near the lower band, suggesting a possible rebound. Considering these factors, I recommend a long position strategy targeting a modest profit. We will enter a long position at $0.316. To mitigate risk, place a stop-loss order at $0.308, just below the lower Bollinger Band. Our target price will be $0.325, aligning with the resistance level and a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 30 and a price touches the lower Bollinger Band, it signals a strong buying opportunity. We will enter a long position at $0.316. The stop-loss will be set at $0.308, and the initial target price will be $0.322. If the price reaches the target, we will move the stop-loss to break even at $0.316 and extend the target to $0.325 to capture further potential gains. This layered approach allows us to capitalize on the expected rebound while protecting our capital. Based on the historical data and forecast, Dogecoin has shown a downtrend recently, with the forecast prices indicating further decline. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands are also contracting, suggesting decreasing volatility and potentially a trend reversal. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.078. The stop-loss will be set at $0.076, just below the forecasted price for June 25, 2026. The target price will be $0.086, near the resistance level observed in the past 2 weeks. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, it's a strong signal for a potential rebound. The current RSI is at 33.0, which is not at the oversold level. However, the forecast indicates a potential dip to $0.0767, which is close to the support level of $0.0785. Therefore, I suggest waiting for the price to reach $0.078 and then enter a long position with a stop loss at $0.076 and a target price of $0.086. This approach combines technical indicators with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Stellar shows a generally upward trend, although with significant volatility. The RSI consistently fluctuates, recently crossing above 50, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased price movement. Given the current RSI of 64.1, we are in overbought territory. Therefore, I recommend a short-term strategy focused on capitalizing on potential pullbacks while anticipating further gains. My strategy involves a carefully timed short position. Entry price should be $0.234. The stop loss should be set just above the upper Bollinger Band at $0.254 to protect against a breakout. The initial target price is $0.217, aligning with the forecast price for June 19, 2026. If the price action continues favorably, a secondary target can be set at $0.205, the closing price from June 5, 2026. This approach combines technical indicators with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Zcash shows a mixed trend with periods of both upward and downward movement. The RSI consistently remains below 53.3, indicating a generally weak momentum. The forecast prices suggest a potential upward movement initially, with a peak around $461 before a possible correction. Considering the support level at $421 and the resistance at $528, a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels is recommended. We will initiate a long position when the RSI crosses above 37.1, aiming to capitalize on the initial upward momentum in the forecast. The entry price will be $423, with a stop loss set at $411 just below the recent support level, to limit potential losses. The first target price will be $453, aligning with the first forecast price and a moderate upward movement. If the price continues to rise, the second target will be $461, coinciding with the highest forecast price. If the price breaks through the resistance at $528, the final target will be $528. This strategy balances risk and reward, leveraging the forecast's potential while incorporating protective measures against unexpected downturns. Based on the historical data and forecast, Cardano exhibits a weakening trend, particularly evident in the recent downward forecast. The RSI consistently remains below 30, indicating oversold conditions. Considering this, I propose a contrarian strategy focusing on short-term upward movements following potential bounces from oversold levels. Specifically, on June 19, 2026, when the forecast price is $0.148, the RSI is extremely low, suggesting a potential for a brief upward correction. I recommend entering a long position at $0.148 with a stop loss placed just below the forecast price at $0.145. A conservative target price would be $0.152, aiming to capitalize on a small rebound. However, given the overall bearish outlook and the consistently narrowing Bollinger Bands, caution is warranted. The forecast data indicates further declines. Therefore, I would implement a portfolio that prioritizes capital preservation. The suggested strategy should be considered a small portion of a larger, diversified portfolio. Should the price fail to reach the target of $0.152 by June 20, 2026, the position should be closed immediately to minimize potential losses. This approach balances the opportunity for short-term gains with the need to mitigate risk in a declining market. Based on the historical data and forecast, SKY exhibits a generally sideways trend with consistent support around $0.0559. The RSI consistently remains below 40, indicating oversold conditions and potential for a rebound. The Bollinger Bands show that the price has been fluctuating within a narrow range, with the bottom band frequently touched, suggesting buying opportunities. Given these indicators, my strategy focuses on capitalizing on the oversold conditions and potential upward momentum. I recommend a long position entry at $0.0542, coinciding with a forecast price and a touch of the lower Bollinger Band. A stop-loss order should be placed at $0.0535, just below the lower Bollinger Band to limit potential losses. The target price is set at $0.058, aligning with the recent resistance level and providing a reasonable profit margin. To refine this strategy, I incorporate the RSI levels. When the RSI dips below 20, it signals an extremely oversold condition, reinforcing the buy signal. Conversely, when the RSI reaches 80, it suggests an overbought condition, prompting a potential exit. The portfolio will be 60% based on the Bollinger Band strategy, 30% based on the RSI strategy, and 10% based on the support and resistance strategy. Therefore, the entry price remains at $0.0542, the stop-loss at $0.0535, and the target price at $0.058. This blended approach aims to maximize returns while managing risk effectively, leveraging the strengths of each technical indicator. Based on the historical data and forecast, Near Protocol shows a general upward trend, bouncing around the support price of $1.97. The RSI fluctuates between 43.8 and 57.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Considering the forecast for the next week, with prices ranging from $2.15 to $2.32, I recommend a long position strategy. We will enter a long position at $2.15, placing a stop-loss order at $2.07 to limit potential losses. The initial target price will be $2.32, aiming to capitalize on the anticipated upward movement. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, we will consider entering a long position. If the RSI exceeds 80, we will consider exiting the long position. When the price touches the lower Bollinger Band, we will consider entering a long position. When the price touches the upper Bollinger Band, we will consider exiting the long position. The final portfolio will be a combination of the upward trend strategy and the RSI and Bollinger Band signals. Therefore, we will enter a long position at $2.15, set a stop-loss at $2.07, and target $2.32. If the RSI falls below 20 or the price touches the lower Bollinger Band, we will enter a long position at $2.15, set a stop-loss at $2.07, and target $2.32. If the RSI exceeds 80 or the price touches the upper Bollinger Band, we will exit the long position at $2.32. Based on the historical data and forecast, midnight demonstrates a volatile trend with periods of consolidation. The recent RSI values hover around 40 to 50, indicating neither strong overbought nor oversold conditions. The forecast prices for the next week suggest a potential downward trend, with prices falling to $0.0292. Considering the support price of $0.0303 and the resistance of $0.034, we can implement a short selling strategy when the price touches the resistance level. Therefore, I recommend a short selling position with an entry price of $0.034. A stop-loss should be set just above the resistance at $0.0345 to limit potential losses. The target price for this short position will be the support level of $0.0303, aiming for a profit of $0.0037. The Bollinger Band strategy suggests a potential downward movement as the price is near the upper band. This strategy combines the resistance level, RSI readings, and Bollinger Bands to maximize potential returns while managing risk. Based on the historical data and forecast, Jupiter shows an upward trend with increasing prices from $0.153 to $0.196. The RSI fluctuates between 34.8 and 56.6, indicating periods of both oversold and overbought conditions. Currently, the RSI is approaching the overbought level, suggesting a potential pullback or consolidation. The Bollinger Bands show that the price is moving towards the upper band, indicating a bullish momentum. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.175, placing a stop-loss order at $0.174, just below the support price to mitigate potential losses. The initial target price will be $0.183, aligning with the forecast price and the upper Bollinger Band. To refine the strategy, we will implement a dynamic target price based on the RSI and Bollinger Bands. If the price reaches $0.183 and the RSI falls below 70, we will move the stop-loss to the entry price of $0.175 to secure profits. If the price continues to rise and the RSI exceeds 80, we will adjust the target price to $0.187. If the price continues to rise and breaks the resistance of $0.199, we will set the target price to $0.191. This adaptive approach will allow us to maximize potential gains while managing risk effectively. This portfolio combines RSI, Bollinger Bands, and support/resistance levels to create a robust and potentially high-return investment strategy. Based on the historical data and forecast, Starknet shows a slight upward trend, although it has been fluctuating within a defined range. The RSI consistently remains below 50, indicating a generally weak momentum. The Bollinger Bands have been narrowing, suggesting a period of consolidation, but the recent price action has been testing the upper band, hinting at potential upward movement. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. Specifically, let's enter at $0.0334. To manage risk, place a stop-loss order slightly below the support level at $0.0330. For the target price, we'll aim for the resistance level of $0.0398, offering a substantial potential gain. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper band, which has been trending downwards, it signals a strong bullish momentum. In this scenario, we will adjust the target price to $0.0405. Conversely, if the price touches the lower band and the RSI is below 30, it reinforces our entry signal. This combined strategy provides a balanced approach, capitalizing on both momentum and range-bound trading. The portfolio will consist of 60% based on RSI strategy and 40% based on Bollinger Band strategy for efficient risk management and high returns. Based on the historical data and forecast, Stellar shows a generally upward trend, although with significant volatility. The RSI consistently fluctuates, recently crossing above 50, indicating strengthening momentum. The Bollinger Bands have been widening, suggesting increased price movement. Given the current RSI of 64.1, we are in overbought territory. Therefore, I recommend a short-term strategy focused on capitalizing on potential pullbacks while anticipating further gains. My strategy involves a carefully timed short position. Entry price should be $0.234. The stop-loss should be set just above the upper Bollinger Band at $0.254 to protect against a breakout. The initial target price is $0.217, aligning with the forecast price for June 19, 2026. If the price action continues favorably, a secondary target can be set at $0.205, the closing price from June 5, 2026. This approach combines technical indicators with forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, FLOKI shows an upward trend with increasing RSI values from 25.2 to 53.5 over the past 2 weeks. The price has consistently tested the support level of $0.0000242 and has not breached it. The forecast indicates a continuation of this upward trend with prices hovering around $0.0000250 to $0.0000261. Considering the RSI nearing overbought territory and the Bollinger Bands showing a narrowing range, a strategic approach combining RSI and Bollinger Bands is recommended. We will implement a long position when the RSI dips below 30, anticipating a bounce back towards the resistance level of $0.0000289. Specifically, we will enter a long position at $0.0000250. To manage risk, a stop-loss will be set at $0.0000242, just below the established support level. Our target price will be $0.0000260, aligning with the upper end of the forecast range and providing a reasonable profit margin. This strategy leverages the upward momentum, utilizes the support and resistance levels for risk management, and incorporates technical indicators for precise entry and exit points, aiming for a high return on investment. Based on the historical data and forecast, DeXe shows a volatile trend with periods of both upward and downward momentum. The RSI fluctuates between 41.2 and 72.8, indicating oversold and overbought conditions. The Bollinger Bands also demonstrate volatility, with the price frequently touching or crossing the upper and lower bands. Considering the recent downward trend and the forecast prices consistently below $17.3, a cautious approach is warranted. I recommend a strategy focused on short-term opportunities with tight stop losses. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI drops below 20, indicating an oversold condition. For example, on June 18, 2026, the RSI was 43.4, which is close to the oversold level. We'll enter a long position at $14.5, the support price, with a stop-loss order at $13.5 to limit potential losses. The initial target price will be $15.5, aligning with the upper Bollinger Band. If the price reaches $15.5, we will consider moving the stop-loss to the entry price to secure profits. If the forecast continues to show a downward trend, we will adjust the strategy to a short position when the RSI exceeds 80, with an entry price of $19.5, a stop-loss at $20.5, and a target price of $17.5. This approach balances potential gains with risk management, capitalizing on short-term price fluctuations while protecting against significant losses. Based on the historical data and forecast, Jito demonstrates a clear upward trend, particularly evident in the recent price surge from $0.534 to $0.747. The RSI consistently hovering between 50 and 70 suggests that the asset is neither excessively oversold nor overbought, indicating continued momentum. The forecast for the next week projects further price increases, reaching $0.813. Considering the support price of $0.619 and the resistance price of $0.794, a strategy focusing on capitalizing on upward movements while mitigating downside risk is recommended. I suggest a long position with an entry price of $0.7, a stop-loss placed just below the support level at $0.619, and a target price of $0.813. This strategy leverages the upward trend and forecast while providing a safety net with the stop-loss. To refine this strategy, we'll incorporate Bollinger Bands. The price frequently tests the upper band, suggesting an opportunity for profit. We'll implement a strategy that enters a long position when the price touches the lower band, aiming to capture the subsequent bounce towards the mean. Specifically, enter a long position at $0.429, place a stop-loss at $0.407, and set a target price at $0.54. Combining this with the initial long position at $0.7, we create a diversified portfolio. The primary long position at $0.7 aims for substantial gains based on the overall trend, while the secondary long position at $0.429 capitalizes on short-term volatility and potential bounces. This blended approach optimizes risk-reward and aims for high returns by leveraging both trend following and mean reversion strategies. Based on the historical data and forecast, Eigenlayer shows a clear upward trend. The price has been consistently moving towards the resistance level of $0.246. The RSI values fluctuate between 37.1 and 58.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has recently been trending outside the upper band, suggesting a strong bullish momentum. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.195, placing a stop-loss order at $0.156, just below the lower Bollinger Band. The initial target price will be $0.215, near the support level, with a potential for further gains towards the resistance at $0.246. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. When the RSI dips below 37, indicating an oversold condition, we will enter a long position. Conversely, when the RSI reaches 80 or above, suggesting an overbought condition, we will consider taking profits. The Bollinger Bands will act as dynamic support and resistance levels. If the price touches the lower band, it signals a potential buying opportunity. If the price touches the upper band, it suggests a possible profit-taking point. Therefore, the final strategy is to enter a long position at $0.195, set a stop loss at $0.156, and target $0.215. If the price continues to rise and reaches $0.246, we will adjust the target price accordingly.